Welcome to TradeTheMBA.com. This is John. This report is for the 10th of June, and we're hovering right around that peak. And not a surprise, you should have been doing better, but of course, you get your riots in LA. That's going to be spreading because it seems that that's where they want the summer heat to go. Remind you of what they did in 2016 and that, where they create the crisis and there's going to have to be a response. And what happened last time, there was no response. And so it kept getting ridiculous. But now, getting a pretty fast response to it. So we'll see how that plays out. But this whole threat of not paying their taxes and stuff from California, and that it's interesting. But I think it's just a bunch of much to do about nothing. But from a market standpoint, they're still waiting for some kind of resolution of data, and everything pretty much is on hold. We just are plugging away, but not really moving because oil's not under control. From a NASDAQ standpoint, you can still see it's generally positive, but doesn't quite have the impetus because there's no finality to anything. Nothing's been flipped and converted because it's all held up in the courts. So that's just delaying things. Fed's not doing a thing. That's keeping rates excessively high relative. But you would think that that would be drawing investment from overseas because it's an advantageous time to move into dollars, given the weakness that we're seeing. And this is the problem. That oil spike is going to be harmful. Now, of course, right now they're reading the lowest inflation numbers, but that's a result of these dips. And now that we've gone back through there, you're going to see a perk up. So that's why the Fed keeps talking about how they're worried about, tariff inflation pop up, because they're looking down the road. They're not looking at the current data, which the current data is just a reflection of what happened before. So that's where there's that time lag. You just have to forget what you hear about it and understand where we're at. From a euro standpoint, of course, they're fine with where things are at, even though they're cutting rates. Still, Eurozone's holding up because they think that somehow the U.S. is going to implode on all this. And when that narrative breaks down, though, that's going to be ugly for the euro in general because they've just got systemic problems they're not getting rid of anytime soon. From a gold standpoint, it's still a positive because there's still uncertainty. So you have the geopolitical risk that's baked into this. And as long as that's there and the continued deficit spending, of course, everyone's waiting to see what happens with the big, beautiful bill and whether that stalls, improves, whatever happens to it. We expected Bitcoin to make its move. It had the magenta cross above, and we were looking for it to move back to the 100% there and on its way. So not a shock within that frame. And same thing happening, actually, ETH outperforming slightly because it's already up at the 100%. So a little breakout there would show that ETH has finally caught up and exceeded. What we saw from an intraday was the bullishness that just at the end of the day faded. And this is just options trading. They've got to neutralize calls and puts. So you saw the early morning rise, calls took advantage of it, and they wiped out all the gamma on that setup there. And then we saw more weakness within the intraday, but from the early pre-market of Europe. And then boom, it spiked against it, but yeah, that was just a fake short cover rally, and then boom, collapsed all the way back down and filled exactly what was expected from the MBI white spikes. Secondary one took place right there, which was the signal after you had the spike up. Even when it broke down here, you're still waiting for the next move. That was the trigger, and it still took a little while after that, at least time-wise. Didn't change the outcome of it. That's building back right now, and again, we're pretty much neutral. So we're still waiting for any kind of development and whether or not this protest rioting begins to spread and whether that will have any impact at all. From an LA standpoint, it's too localized, but I know they're talking about moving it nationwide. So I think they're seeing how it plays out and what the response is going to be. And obviously, you're calling in the Marines and that already. So they're going to quell it pretty quick. And that, if that's the message and that's going to be the play going through, I think they're going to find a hard time justifying that. That's a good thing. And it doesn't help their narrative when you see them all flying Mexican flags and claiming that, even though they're burning everything and looting it, it's not, an insurrection or riot from foreign power. They're not waving American flags while doing this. So it's, they're having to adjust that narrative. But overall, market-wise, not yet a potential problem because they haven't stopped any kind of production or anything. So we just continue to look for data. When we get it, we'll just follow what it is. But I think that we're going to continue to look for more of this choppiness, but still has an upward bias to it. As always, anything relevant, I'll put on the team chat. Have a good one. Trade well.